Hey, this is Matt from InvestiQuant. Today is Thursday, May 6, 2021. And before we get started here today, I wanted to do one more reminder for our webinar, which is after the close today at 4:30 p.m. Eastern Time. In this webinar, we are going to be talking about auto trading, the way we do auto trading, and the way that you could participate in our auto trading program as well. We'll go over all of your questions you have about what is auto trading. We'll explain it a little bit, and we'll also show you the results that we have seen with our auto trading program that you could be seeing as well. So we're going to be doing that today at 4:30 p.m. Eastern Time. There is a link underneath this video that you can click on to sign up to attend that webinar at 4:30, and we will hopefully see many of you there this afternoon. All right, let's hop into today's study, and today's study is going to be based upon the price action that we saw yesterday. Yesterday was kind of a unique day in that we had a higher close on the session, but we had a red candlestick. So we opened up sizably. We ended up selling off down to around the prior session close. We filled the gap there and then bounced. And then after a little bit of a rally into the afternoon, it failed again into the close. So we have a pretty sizable red candlestick. However, it did close higher and we did fill the gap yesterday. So we're going to look at those three pieces of information, put it in a similar market environment, and see what it has led to historically. The setup is going to be based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at the close, which is 4:15 p.m. Eastern Time. Now, currently, we are trading higher in the pre-market session, so I'm going to go over here in the opening filters library, click on gap up from the gap direction. If by chance we were to sell off ahead of the open, you could go ahead and change that easily in here. Look at gap down, or maybe gap down below prior day low. Who knows where we would open. But right now we're trading up, so that's what I've got selected here. Now, to set up this price action that we saw yesterday, you can describe about any type of price action you can think of using the Discover platform. So the way we're going to do it here is we're going to say that it was a higher close that closed below the open. So that's a red candlestick that closed higher than the prior session. And it was an up gap that filled the prior day's closing price. So I can grab that from these different categories here, or I can just go over to the active today section and build it quickly with a single click on each of those. So I'm going to click on higher close, close below the open, day after up gap that filled. So I just added all three of those from the active today section. Now I can go into the indicators and say that we are below a 10-day simple moving average, but above a 200-day simple moving average. And now I can click view results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time, when you gap up, following a day that had a red candlestick that closed higher than the prior session close, and at some point in that day touched the prior session closing price. So it filled its up gap. This has taken place below a 10-day simple moving average, but above a 200-day simple moving average. Historically, the S&P has 32 samples dating back to 2003, so it's not a real common pattern to see this type of action. The NASDAQ has 34 samples, the Dow 32, and the Russell 39. So similar sample sizes across all, but not something that happens all that often. If you look at the win rates, though, they are very similar. You're seeing the S&P coming in at 69%, the NASDAQ 71%, the Dow 69%, and the Russell 62%. So all of them are at least mildly favored, and some of them are quite strong there, close to 70% on 3 of the 4 instruments. If we look at average win and average loss, the average win is larger than the average loss for the S&P and for the Dow. The NASDAQ has a larger average loss, and the Russell has a larger average loss, not sizably, but both of those have larger average losses compared to average wins. So we're a little bit mixed on which has had larger moves up or down, but all 4 of them have been in agreement historically that the moves have more often come to the upside following this pattern. So again, I don't know if we're going to be opening up this morning, but this is based upon gapping up, since that's what we're currently trading at right now. That's what I put in here, and the results were pretty interesting to me. So hopefully you found that helpful. Reminder, we'll be having that webinar after the close this afternoon, 4:30 p.m. Eastern Time. If you want to learn about our auto trading program, you can sign up at the link below this video, which is InvestiQuant.com/webinar. We hope to see you there this afternoon.